Hello, everybody. Jeremy Ritz here. Courage pays better than fear trading. Episode number 50 of the Traders Podcast, halfway to 100. And quarter one earnings are going to kick off next week, and they could be the catalyst to send the market down its next leg lower, as if it's not already low enough. The S&P 500 is crumbling after Trump's tariff bomb. Big tech is tanking. Costs are spiking. Market makers are now saying 5 rate cuts this year. Are we doomed? What in the world is going on? Today we'll unpack why these earnings might sink us lower and how to trade it. It's a big milestone episode. I'm glad you're here with me for it. So subscribe, buckle up, and let's roll. Before we get into the content of this episode, I want to remind everybody about the free spring trading and investing beginner bootcamp that I'll be doing April 8th and 9th. 8:45 p.m. Eastern Time. I will be teaching the fundamentals and essentials of trading and investing, and I would love for you to join me. To sign up, check the show notes. There's a registration link. Sign up, and I will see you there April 8th and 9th. But let's get into it. Here's the deal. Quarter one earnings are going to start next week, and really the big day that I'm looking for is next Friday. That's April 11th, when the big banks are going to report. And these companies are going to be walking into a tariff storm. With this 10% tariff on all imports, 25% on vehicles, 54% on China next week, markets, they're tanking. We're seeing a massive move down, really across the board, and nobody is being spared at this moment. Though Bitcoin is kind of hanging in there quite admirably, I will point out. But why does this matter now? Well, the reports that we're going to see, this information's in these earnings report are going to reflect January to March. This is pre-tariff, but what we really want to pay attention to is the CEOs of companies talking about the guidance factoring in this mess from tariffs and what that guidance will be. And that's future looking, right? And we see a lot of posts on social media talking about how margins are toast, demand is drying up, companies are soaking up cost, and as a result, they're going to have to jack up prices. And either way, we could see profits take a hit. And this isn't hype. It's the setup for a market slide. Now, keep this in mind. I talked about before the tariffs hit that potentially it could be a sell the rumor, buy the news type event, because these tariffs we've known for a long time were coming. The move was telegraphed. And so rarely does the market do what we think it's going to do. But in this case, the market did what we thought it would do, what logically we thought it would do on those tariffs. And so that converse position, that contrarian position of sell the rumor, buy the news didn't happen. It was just sell the whole damn thing, right? And so with earnings, it could be telegraphed the same way, because how can all of this pressure that's coming from these tariffs, how could that lead to any type of positive forward guidance from companies? And so that's what I really want to spend some time talking about today. So why could we see these earnings trigger the next leg down in the market? Well, there's a few reasons. First of all, there's going to be the tariff costs killing margins. Take tech, for example. Apple's down significantly because China put a 34% counter tariff in place, and that's going to hit iPhone parts. And then you have companies like Amazon who are also down significantly. They can't keep eating higher import costs. It causes profits to shrink. And then secondly, think about demand. Demand is going to tank, and retail is a red flag for that. Best Buy. I mean, you want to talk about retail, fearing price hikes, that's going to crush sales. And if consumers are like, no way, I'm not spending, we're going to see revenue crater for these businesses. But more importantly, as I mentioned just a bit ago, it's the forward guidance. And that's what I really think is going to scare Wall Street. And CEOs next week, again, Friday, we have the big banks. we might see these CEOs slashing forecasts, saying that tariffs plus slowdown equals pain. And pain is not what Wall Street wants. And so we can see that push down below 20%. As the time I'm recording this, we were almost at 17% down on the SPX. And if that forward guidance is negative and it's not, it doesn't even have to be rosy, but just modest. But if it's negative, then we can come down even lower than where we are now into bear territory. So let's talk about how we can approach this from two different perspectives as a trader or as an investor. Well, first of all, if you're a trader, there are plenty of opportunities out there right now to go short, right? If we look at some of these massive moves that have taken place, if you have a strategy that you follow and you've been sticking to your plan, you've been able to make money on some of these significant moves to the downside. And following that strategy, if we continue to push lower, if we have little relief bounces, retests, you could look for opportunities to continue short off of those retests. And so that's something that we want to do if we are trading this market. And the other thing that we could do, let's say in our long-term portfolio, if we have long positions, we can hedge with puts. You could purchase puts as insurance against stocks that you own in your portfolio. So if there is a further drop, those puts become more profitable. You can sell them, collect that profit, and that will negate what you've lost if your stocks continue to drop. And the last thing is if we approach this as investors, we have to identify those key areas where we want to own stocks or where we want to DCA or dollar cost average, meaning using our moving averages, our longer term moving averages, the 100 SMA, simple moving average, the 200 SMA, or even on the weekly, not even the daily because we're so far down, but identifying, okay, this is an area of support where this ticker has bounced before. I'm going to nibble on some shares at this area. And if it comes down to this next area of support, I'm going to nibble on shares at this area. But we have to be careful right now in going long because we just don't know how much further this market has to drop. And so I know for me personally, I'm not going all in on long positions until I see some capitulation or information that the market truly has found a bottom. But I am starting to slowly and in small size pick up shares of stocks that I do believe in the long term are going to rebound. Because keep this in mind, I've talked about this several times over the last few weeks. Market downturns, corrections, bear markets do not last forever. They are opportunities, and all you have to go and look at for evidence of this is the historical charts because the market is designed to go up, and this current downturn, this too shall pass. And so before we wrap up here, I just want to show you the earnings for next week that I'll be watching. Again, I talked about Friday with the big banks. We're going to look at those here in a second. But you can find this information on TradingView in the calendar section, but we could see here the companies for Monday, the companies that are going to be reporting on Tuesday. Wednesday really is one of the first reports that I'm going to be looking at. Delta Airlines, ticker symbol DAL. So we're going to see how tariffs are being factored into airlines forward guidance. So I'll definitely be watching that report. Again, that's going to be reported at 6:30 a.m. So keep an eye on that one. That's Wednesday, April 9th. I'm going to scroll down here. Let's see what else we have coming in. We can see CarMax at 6:50 a.m. on Thursday, April 10th. Again, used car sales, how are they being impacted by tariffs? And really, it's going to be important to just pay attention to what is said in these earnings calls from CEOs because it's going to give us a feel as traders and investors what we can expect moving forward. So make sure you're paying attention to what these big timers are saying in these reports. And then here's the big day, Friday, April 11th. We are going to get JP Morgan. That's at 6:45 a.m. 6:55 we get Wells Fargo. At 7:30, Morgan Stanley. 9:30, BlackRock. So that's really where you're going to get the peek under the hood, if you will, in terms of how tariffs are going to impact the financial system, banking, banks who provide liquidity. And I'm really, really eager to see how these banks report, because this is going to tell us a lot about where we are headed. And really, all the banks are down right now. Everything's down. But pay attention, mark your calendars for this. Friday, April 11th, big day for the banks. And oh yeah, in the days prior to this, just if we just look at the economic calendar, what are we getting Thursday? We're getting core inflation. We're getting CPI, and Friday we get PPI. So we are getting inflation data on Thursday and Friday of next week. So it's a big week, not just for earnings, but also data. And that's going to do it for episode number 50 of the Traders Podcast. Thank you so much for joining me for this episode, for being with me on this milestone, episode 50. I appreciate it very much. Before you check out here today, make sure you check out the video I did specifically about tariffs from 2018 from Trump's first administration. I'll link that for you guys as well to check it out. Don't forget about the free boot camp that is coming next week on Tuesday, April 8th and 9th. Register for that. That is available in the show notes. But until next time, for episode 51, as I always say, make it a great day. This is Jeremy Ritz signing off. Courage pays better than fear trading.